Wasabi wallet, unfairly private.
What is up, everyone? I'm Ben with the BTC Sessions, and this is your daily session.
Hodl the Bitcoin.
Before we dive in, I want to give a big shout out to sponsors of the show, LEDN.io. This is where you can use your Bitcoin for a variety of different services. I've been working with and using these guys for well over a year. The first thing I ever used were their Bitcoin-backed loans when I was in a pinch and I needed dollars. I didn't want to sell my Bitcoin because that's taxable, and I was worried about buying back in at a higher price point. So I was able to deposit my Bitcoin here, get a Canadian or US dollar loan to my bank account, and when I paid that back, I got back the exact same amount of Bitcoin. They also have a couple other products. They've got their Bitcoin and USDC savings accounts for interest up to 10%. And then they've got their B2X offering, which gives you the ability to use the same loan mechanism to buy more Bitcoin on the spot, effectively doubling your Bitcoin. If you want to check them out, there's a link in the show notes down below. And if you use that link and opt to get a loan, they will give you $50 of Bitcoin for free. So do check them out. These guys are awesome. Up next, Cobo Vault, new entry to the show. I did a video on this product not long ago. I was curious. I had one to play with. Fucking awesome. Honestly, it's becoming one of my regularly used wallets in my arsenal, and I tend to use this one quite often. And why? So there's a lot of awesome things about it, but I want to point out a couple different things. Number one, that for me really sealed the deal is compatibility when it came to all of my favorite wallets. We've got Electrum, we've got Wasabi wallet, we've got Blue wallet, we've got Bitcoin Core. You've got just a plethora of options on top of their dedicated app that you can get and use if you so please. But I mean, given how much I love Wasabi, how much I love Blue wallet, and I use Electrum regularly, it was a no-brainer for me to want to use this. Furthermore, they've got excellent support for multi-sig, which I've been doing a ton of videos on, so do check that out. They also support Spectre, and there's more compatibility coming down the road. And beyond that, this thing is air-gapped. And so what does air-gap mean? It means that your transaction is fully signed and approved offline. So you never actually plug this device into a computer. You actually sign it via QR codes back and forth. So the only information that gets sent to your computer via QR code is a pre-approved transaction by you going to a specific address, which you can audit quite easily through the QR codes if you so choose. So I highly recommend check out Cobo Vault. Again, these guys have been working like crazy, and check out my tutorial of how to use them because I think you'll really enjoy it. So thanks to Cobo, and kudos to Cobo on such a good job, but thanks to Cobo for joining the show. And finally, Crypto Cloaks. Have you guys heard of Crypto Cloaks? They are fucking awesome. A bunch of awesome Bitcoiners got together, got some 3D printers, and started making rad shit. They've got boxes for your nodes. They've got these cool little grenades which you can put open dimes in from the coin cart store. They've got, we'll talk about the Bitcoin Honey Badger in a minute, stickers, swag, covers for your hardware wallets, coasters. They've got just about every cool little bit. Like, they've got a Bitcoin rabbit hole nightlight. These guys are fucking rad. You probably actually heard of them with the wave of controversy around the Hedl node or the Held shell. Dan Held got together with them and designed his own shell for a node, which is a beast of a node shell. It's actually quite pretty. cool little LED lights and everything. I highly recommend you guys check these guys out over at Crypto Cloaks. This is what I plan on getting on the shelves behind me here, the Bitcoin Honey Badger. So this is like, it's a little like a statue almost, but you can also hide things in it. So like you can hold your hardware wallets inside the larger one here. You can fit all of your hardware wallets in it depending on what you have there. But again, awesome product, awesome guys. Follow them on Twitter too, because they tweet some hilarious and awesome things, and they're quite active there. So do check them out. I can't thank these guys enough for joining the show because I've really loved everything they've done. They sent me a while back a shelf from my Ledger Nano S that drills into the desk. Thing lasted forever. So do check them out. These guys are friggin' awesome. Crypto Cloaks. And with that, let's dive into the show. So Bitcoin has been making some advances in the price lately, and what's interesting is it seems to be following Plan B's stock to flow model very, very well. To quote his words, like clockwork. So let's read a little bit from this Cointelegraph article here. So Bitcoin is heading to its $288,000 and higher price target, like clockwork, as fiat currency woes mount and European inflation goes negative. In a tweet on September 1st, today, creator of stock to flow model Plan B said that the BTC/USD price had performed exactly as expected in August. Another month, another red dot. Listing the monthly closing price since May's block subsidy halving, Plan B noted that each corresponded to the predictions of his stock to flow cross-asset model. Now, he's done a few different models based on different sets of data, but we seem to be leaning towards this cross-asset model where every Bitcoin epoch, every 4-year cut in the supply of new coins coming onto the market may indeed correlate with a different narrative of use cases. So some of those could include, a lot of people think that maybe coming up to that of gold could be next, and perhaps even things like nation states coming on and starting to buy up Bitcoin as part of their reserve. I think what we're seeing right now is we're seeing a lot of companies start to use Bitcoin as a reserve asset. And that may be the theme of this kind of Bitcoin epoch, of its issuance epoch of this 4 years. But we will see. Anyways, reading on here, he said, Bitcoin, like clockwork. Bitcoin has now put in its fourth so-called red dot on the stock to flow chart since May. According to performance after the previous two halvings, that leaves just months before a major price surge ensues. According to the stock to flow cross asset model, the current halving cycle, which like the other last 4 years, should produce a Bitcoin price focal point of $288,000 per coin. The top, the creator Plan B previously explained, could be more than double that, as it does tend to overshoot the asset model prices. So again, if we pull up, this is an excellent site here, if I can just get to it. The stock to flow cross asset model, you can track it live and compare it with the projected versus price end of the day. And you can see, based on kind of a rolling average of 463 days and a rolling average of 10 days, we are below the stock to flow asset model, as we have been in the past. The stock to flow model, if it holds up, if it actually does indeed continue to function as it has historically, then it acts as kind of like a tether to the Bitcoin price. It can fluctuate around it, but it's like an elastic band, pulls it back towards the mean. We can go below, we can overshoot, but it does tend to settle back to it. And if we look, again, as we get towards this stock to flow, if we start to follow this, then in short order, we could be seeing new all-time highs in perhaps a matter of months. Now, it does tend to lag, especially as we hit as we hit the halving in May. It does tend to lag behind the stock to flow model. And it does seem to be, to me anyways, following the previous model a little bit more tightly, but again, time will tell, and it is exciting to watch nonetheless. And there's a lot of macro things affecting this too. So the Fed, Chair Jerome Powell had a speech previously where he talked about how they're not really going to be worried about 2% target inflation anymore. They're just going to do whatever it takes to get inflation going. So they're not going to try and hit a ceiling and stop it there. They're just going to try and make inflation happen, which means the money printer will indeed continue to go burr quite a bit. So just a little bit here. Interest rates near zero. This, by the way, from CNBC. Interest rates near zero likely will stay in place not for months, but years, as the Federal Reserve seeks to re-engineer an economy characterized by low inflation and an uneven labor market. Wall Street is prepping for a return to the post-Great Recession days when rock-bottom short-term rates prevailed for 7 years before the Fed even tried to move them higher, which, as we saw, didn't fucking work because they then had to inject capital into the overnight repo markets. It was insane. The problems that we're seeing now with the economy were around far before the virus happened. We saw overnight repo markets injections happening as early as last September, so over a year ago, so well before there was any sort of panic around this stuff. Anyways, moving on here, Fed officials have outlined a revised policy in which it will now target average inflation, meaning a higher tolerance for inflation above 2% before hiking interest rates from current levels. In the past, the Fed would look to cut rates when unemployment began to fall as a sign that inflation would not be far behind. In the present circumstances, then, the remaining question will be how deep the Fed's commitment to inflation will run, what will be considered full unemployment, and how many years that will mean for zero interest rates. So what they're talking about when they're saying high tolerance for 2% and how they're talking about average inflation, what they're saying is if they were under that 2% inflation rate for any of the previous years, they can then average that out by above average inflation for future years. And apparently they've been under inflation for an extended period of time. So they could definitely be seeing much higher, potentially even double-digit inflation if they are not careful. And I would not be surprised to see that. The other thing about inflation here is it is calculated by what's known as the CPI, the Consumer Price Index. However, the CPI does not take into account important things like fuel and housing and food, all the shit that you buy on a regular basis. So when you're looking at inflation, it's nowhere near what is actually what you're feeling as an individual when you go and buy things. It's just a small set of assets that they dictate. So it's really not reflective of what the day-to-day average Main Street consumer feels as far as inflation goes. So I don't know. The data here is just absolute garbage. Now, another person bullish on Bitcoin is Raoul Pal. And he's been talking about how Bitcoin is likely to outperform gold as a potential to grow 50-fold. So just a little bit from what he was saying here is that why Bitcoin over gold? So Bitcoin has all the characteristics. By the way, this is the BTC Times, Bitcoin Times. Check them out if you haven't checked out the Bitcoin Times. They've got some solid content that doesn't delve too much into the shitcoinery. So they've been pretty good with that so far. So happy with this publication here. Anyways, why Bitcoin over gold? Bitcoin has all of the characteristics of a safe haven asset. It is censorship resistant, portable, and scarce. Gold, too, is scarce due to its limited supply, but unlike Bitcoin's monetary supply, the gold supply is not fixed. Is there a limited amount on Earth? Yes, but other factors. The amount of circulating gold could potentially increase if a large supply of the precious metal is discovered. Although the probability of this happening is low, it exists nonetheless. Meanwhile, the fixed supply of Bitcoin at 21 million is practically unalterable given the Bitcoin network's decentralized nature. based on the superior scarcity of Bitcoin and its other advantageous characteristics, the argument that Bitcoin could outperform gold remains strong. Atop Bitcoin's fundamental strengths, the massive market capitalization gap between Bitcoin and gold is believed by many to give Bitcoin superior growth potential in the medium term. As Tyler Winklevoss wrote in a recently published essay, the gold market cap is currently estimated at $9 trillion. Considering that Bitcoin's market cap hovers around $212 billion as of August 29th, so this is a couple days back, if Bitcoin catches up to gold, which avid Bitcoin proponents believe to be entirely possible, it would happen through a 42.5-fold upside. So Raoul Pal said about this, Jerome Powell, the chairman of the Fed, has shown that there is zero tolerance for deflation, so they will do anything to stop it. And that is good news for the two hardest assets, gold and Bitcoin. Powell wants inflation. I don't think he gets true demand push inflation, but he will get fiat devaluation in conjunction with the other central banks, all on the same mission. Overall, I think Bitcoin outperforms gold. Gold can go up 2x or 3x or even 5x, while Bitcoin can go up 50x or even 100x. And Raoul Pal famously said in the last couple of weeks here that he is irresponsibly long Bitcoin. So he's definitely well allocated. And if we look at the Bitcoin price charts today, we've seen a nice little bump over the last 24 hours. We are back, at the time of recording, over 12K. It so far today it hasn't quite hit 12,100. It got up to around $12,070. We'll see if this 12K threshold holds or not. We probably will be bouncing around a bunch, and who knows, it could change quite a bit by the time this actually airs. But nonetheless, exciting times for Bitcoin. I am bullish as fuck if you're not sure about that. Let's move on here. Bitcoin miners saw a 23% revenue increase in August, not because of what you think. We've just been talking about bullish price action, actually because of on-chain fees. Okay, so a few points here. By the way, Zach Vol, writer here at CoinDesk, kudos Zach, thanks for this article here. Bitcoin miners enjoyed a 23% increase in revenue during August, driven by higher network fees from increased on-chain transaction volume, as Bitcoin avoided a daily close below $11,000 throughout the entire month. That's pretty big. Like, Bitcoin has been on a sustained price hike above $10,000, the second longest period in history. The only longer time was the run up to our all-time high, and we've just surpassed the previous length of time that we were above 10,000. So that's a good sign. But besides the fact, Bitcoin miners generated an estimated $368 million in revenue in August, up from $300 million in July, and the third consecutive monthly increase in miner revenue, according to Coinmetrics data analyzed by CoinDesk. Revenues estimates assume miners sell their Bitcoins immediately. Now, the network fees brought in $39 million in August, or 10.7% of total revenue, setting the highest percentage of fee-generated revenue in over 18 months. Correspondingly, average daily fees continued July's upward trend, staying above $2 for the entire month of August, according to Coinmetrics data. Now, an important note on fees: if you are worried about Bitcoin fees, there's a few things you can do. One, get yourself a wallet that has BEC32 addresses. This is called native SegWit. It's the most, we'll say it's the most efficient way to utilize the Bitcoin network as far as fees are concerned. This is simply a Bitcoin wallet where the addresses start with BC1. So some of the wallets that I said work with the Cobo that I mentioned, Electrum, Wasabi wallet, Blue wallet, all of those have BEC32 addresses either as an option or by default. Okay, so get yourselves one of those and you'll be off to the races. The other thing you can do is you can do things like batching transactions. If you need to send out multiple transactions to multiple parties, you can do that in one fell swoop by designating multiple destinations all in a single transfer. This is very easy to do via Blue Wallet, so be sure to check them out. You can also do it in Electrum and Wasabi. And again, just watching for, do you really need it confirmed right away, or is it going into cold storage? Like if you're putting it on your Cobo or something like that, then all you need to do is just set the bare minimum fee. A few sats, you'll be fine, especially if you're holding it for a long period of time. So don't overpay in fees, be cautious, and start to learn about how to mitigate those costs. Moving on here, this just from Twitter, I found the biggest Swiss online retailer with over $1 billion worth of revenue is explaining the importance of full nodes, warning about shitcoins, and advising people to mix coins and recommending Tales from the Crypt, which is an excellent podcast. Check it out. And Stefan Livera, another excellent podcast. That's pretty cool. So these guys are called Digitec. They basically online retailer that does a lot of tech related stuff. And they started to accept Bitcoin through a third party for payments above 200 Swiss francs. According to a recent article, they had over 1.1 million of revenue, mostly through Bitcoin and Ethereum. That second part's unfortunate, since they started accepting crypto last year. So thanks, Simon Lutz, for the heads up on this recent development out of Switzerland. So cool to see. Let's move on here. This is a warning to anybody out there running old versions of Electrum wallet. So I love Electrum wallet, but you have to be careful what software you're running. Somebody was scammed out of $16 million worth of Bitcoin because they were running an old version of Electrum and they fell for a phishing scam. Now this scam and this kind of exploit is not new, and it's been patched, and new versions you won't be susceptible to this. But if you're running something old, if you haven't opened up to Electrum in a while, you're gonna want to get the new version of it. Go directly to the Electrum website, and if you get a pop-up while you're trying to execute a transaction that says download the latest version, do not click it. They won't prompt you to do so. That will likely be a phishing scam if that happens. So I'll just read a little bit here. A year-old GitHub thread dedicated to Electrum-based phishing attacks sprang to life yesterday when a user claimed to have had 1,400 Bitcoin. Oh my God. To even have 1,400 Bitcoin in the first place. $16 million stolen after falling for an old trick. The user said, I had 1,400 Bitcoin in a wallet that I had not accessed since 2017. Shit, explained the Bitcoin holder. I foolishly installed the old version of the Electrum wallet. My coins propagated. I attempted to transfer about 1 Bitcoin, however, was unable to proceed. A pop-up displayed stating I was required to update my security prior to being able to transfer funds. That's a red flag. Wallets will always let you send out, even if you have an older version. If you're unsure, go to the official website, check online before doing anything. Take your time, step back, and think. Anytime you see something that's fishy with any wallet whatsoever, just be careful. According to the luckless holder, the update immediately triggered a mass transfer of funds to an unknown address assumed to be the scammers. Now, this wasn't the only guy recently that got caught with his pants down with Electrum. Another Bitcoin claims he lost $430,000 in the same Electrum wallet scam. This article also from Decrypt, yet another GitHub user has claimed he lost 36.5 Bitcoin. Again, just to have like 36 Bitcoin sitting there in the first place and then to lose it. Due to an exploit in an outdated version of Electrum wallet, adding over 430 grand to the cache of 2,171 Bitcoin, roughly 25 million. The hackers have reportedly stolen this way since 2018. $25 million they've made off with so far. As Decrypt reported yesterday, the GitHub user claimed that he lost a whopping 1,400 Bitcoin after accessing his Electrum wallet for the first time since 2017. Again, the patch since then exploit triggered a mass transfer of funds. And this new guy said, I had a similar situation 2 months ago. 36.5 Bitcoin was stolen from my address. He said some of the stolen Bitcoin went to Binance, but they ignore my appeals and do not return. Yeah, that's rough. Yeah, guys, be so careful. If you ever see anything fishy, take a step back. You don't need to execute the transaction right away. Just think, and if you're unsure, look online. Double check. Just double check. Okay, moving on. DeFi. Oh my God, DeFi. DeFi bubble. The DeFi bubble is crazy. Those of you not sure, DeFi, decentralized finance, complex financial derivatives on top of Ethereum. So the DeFi bubble is still growing fast. Data from Twitter analysts shows. So data from May, June, July, and August showed DeFi crypto assets have surged in price on average 42.9%, 56%, 60.5%, and 168.4% month over month. Massive monthly gains for any asset class, according to a chart posted on August 31st by Paribus on Twitter. However, Vitalik, the creator of Ethereum, as much as I don't like Ethereum, he's right here. He's talking about how ridiculous that is. So I'll read a little bit from Cointelegraph. Vitalik Buterin, the co-founder of Ethereum, has again taken to Twitter to warn against naive bullishness in the decentralized finance sector, comparing the economics of yield farming tokens to the Federal Reserve's money printing. Yield farming, which is providing liquidity to earn interest in the form of tokens. To break that down further, you provide Ethereum or wrapped Bitcoin or something like that to be traded and utilized in other ways, and you earn interest in the form of certain types of tokens which supposedly have value. Anyways, it's taken the crypto community by storm and sparked the DeFi boom. However, Vitalik highlighted the aggressive supply inflation of many governance tokens, saying that this puts downward pressure on prices of coins that are getting printed nonstop to pay the liquidity providers. So essentially what's happening is people are depositing like some form of Bitcoin or Ethereum, and they're getting kickbacks in these tokens, again, which are supposedly worth money, but those tokens are just being minted like crazy. It's like the Fed money printer going crazy, but like worse. He said, his quote is, seriously, the sheer volume of coins that need to be printed non-stop to pay liquidity providers in these 50 to 100% per year yield farming regimes makes major national central banks look like they're all run by Ron Paul. Of course, Ron Paul being the end the Fed person who's a former presidential candidate that basically wants to audit and or end the Fed. And again, Vitalik is not alone in his assessment of the inflationary aspects of the DeFi sector, with Twitter user Larry PC likening yield farming to a giant Ponzi scheme. He replied and said, yield farming at this point is just a giant Ponzi. Someone forks a well-established project, makes minimal changes, and then gives it a funny name. Some insiders farm a large amount of coins, shill it on social media, and dump it on naive investors at massively inflated prices. Now, getting into the end of the article here, they say, not everyone is a skeptic, with investor David Lack responding, if you see those printed coins as new cryptocurrencies, then yes, it's insane. But if you see them as equity in new crypto startups or projects that generate cash flows, it's not that crazy. There will always be new startups with real potential in crypto. And I think this is king shit take of everything. Why? This is literally the ICO Boom 2.0. If you think that all these projects that are pumping out 50 to 100% year over year annualized returns just by virtue of printing these tokens that are supposedly going to be worth something in the future, your head is so far up your ass, because it's the exact same tactic that all of these ICO founders had in 2017. Oh yeah, we're building this. They throw word salad at you of what they're trying to build. Even if it doesn't make sense, it sounds overly technical. So, you know, the average investor looks at it and goes, yeah, that sounds legit. And then they dump money into it. And whoever's left holding that bag of tokens at the end of the day gets absolutely destroyed. I'm going to call it right now. Most of these DeFi tokens will be worth maybe single-digit percentages of what they will be at their peak. I'm not saying they're not going to pump in the meantime. Shit's crazy right now, and I expect it to be crazier in the coming year, but this is not going to be sustainable. This is absolutely insane. I don't know, man. We'll see. We'll see what happens. I expect further craziness. I expect tons of people to be puffing out their chest saying, look at all these gains I made. But I expect a lot of people to make a lot of bad moves and get very, very screwed by this stuff. So be careful out there. And finally, I just wanted to touch on this really quick because another instance of play stupid games, get stupid prizes. Tether surpasses XRP or Ripple by market cap yet again. Tether USDT, the world's largest stablecoin by market cap, is again outperforming major altcoin XRP. On September 1st, Tether surpassed XRP as the third largest cryptocurrency by market cap, becoming the second largest altcoin after Ethereum. As of press time, USDT market cap accounts for more than 13.4 billion according to data from crypto analytics site Coin360. XRP is now the fourth largest coin by market cap at 13 billion. The latest movement in ranking is not new to the coin market cap crypto market in 2020. Tether outstripped XRP as the third largest back in May previously. Both cryptocurrencies have significantly increased their market cap since then. As reported, Tether previously surpassed XRP at a market cap of around 8.8 billion, while XRP's market cap accounted for 8.6 at the time. So obviously they've both grown since that time. So here it is on CoinMarketCap. You can see Tether. Things have changed a little bit. It's around 13.4 billion, whereas XRP is 13.1. Still, really, none of this should matter. What should matter is valuing your wealth in sats, because if you're dumping money into something like XRP with your sats, you're probably losing them. As we can see, like as the manias really kicked off, people were dumping in a lot of the, especially like some of these peaks. 20,000 sats for XRP, and today it's at around 2,000. So, you know, if you were buying into the major FOMO and some of these spikes when they were yelling that it was going to flip in Ethereum and flip in Bitcoin, then there's a good chance that you lost 90% of your Bitcoin that you parked in XRP at that time. So again, be careful, try not to play those stupid games, and you won't get the stupid prizes that comes with it. I'm going to wrap up there, guys. Thank you so much for watching and or listening. Please do remember to hit like, subscribe, and share. All of those things are very important and really do help the show. If you want to help in another way, you can hit up the sponsors that I mentioned down below. That was LEDN, that was Cobo Vault, and that was Crypto Cloaks. They're all in links down below. Check that out. And if you really loved what you saw, you can always drop me a Lightning Network tip at my tippin.me page. That is tippin.me/at BTC Sessions. And with that, I'm out. Have yourselves a wonderful evening, a wonderful rest of the day, wherever you are. And I'll see you next time for your daily session.